thanks for joining me on my market report. My name is Mike, and this market report is on mortgage rates. We kind of go into what's impacting mortgage rates on a daily basis, whether it's an economic report, if it's a specific sentiment that's out in the markets, or if there's a headline news that kind of created a catalyst for the market. We kind of like are here to report and kind of give you a heads up as to what's ahead, as well as what to watch out for. A little bit about myself. I am a loan officer. I do work with a national lender. If you guys got questions about mortgage rates, programs, process, anything along those lines, we're here to help you out. We'll answer best we can. If you are looking to refinance or purchase, we'd love to have your business and talk to you a little bit about what we can do for you. We do have a lot of different loan programs, great rates. We got great service as well. So I'd love to be able to earn the opportunity to talk to you guys about how we can earn your business. So without further ado, why don't we jump right into the economic report. We just got the one item here today, and that is the consumer sentiment for the September. This is kind of like the midpoint. They do give us out later in the month. We'll have the final. But the previous report came out at 70.3 for the month of August. Forecasters counted for 72, and it came in higher, but not quite to expectations, to 71. So people are feeling, so far, feeling a little bit better where things are at, but not quite what they had hoped. Stocks are down. A lot of it has to do, as I mentioned in yesterday's report, we'll expect some volatility today. We do got quadruple witching, which is basically a bunch of options on the four different factors out there from futures and single stocks and what have you. We won't get into all that, but the options basically expire today. So expect some volatility due to those happenings right now. Also, we're kind of at a conundrum here where investors really don't know exactly where we're going to go. And next week we do got the FOMC meeting, so that's going to have weigh very heavily in next week. That could be a catalyst of where the markets will go. We are waiting to see if the Fed will taper this year or going into next year. So we won't really know until next week. So again, we could have some more choppiness up until then, until we can get see the statement from not Bernanke, excuse me, I'm dating myself, Jerome Powell. So again, this is something we'll have to kind of watch out for. We've had news here. We've had the jobs number coming really poor, so they thought, okay, they're going to wait. But then we had Fed members coming out and saying, no, we're going to taper. We should be on schedule to taper this year. And then we got the CPI report that came out, and that came in pretty tame. Well, not tame, but however, it came in lower than the previous. So it looked like we could potentially have peaked, but we may be coming down a little bit. So now that leads into a sentiment that maybe the Fed might wait a little bit longer on the tapering to see if jobs spike a little bit more before they make any final decisions, which if they do, most likely that announcement won't happen until November. So this is what's kind of happening in the markets right now, and your guess is as good as any of the investors basically out there. So let's see how this is affecting mortgage rates today. We are down. We were down a bit further, but we have kind of subsided a little bit. We'll have to see if we can get any more strength in this excuse me, I can't even get that out there. If we can get the pull back on that a little bit here. Right now we're down about 11 basis points. A lot of lenders did come out with pricing with a little worse pricing today, so mortgage rates are a little bit higher today as a result. If we can get this to pull back some more, maybe we might be able to get some more momentum and get an improvement in our pricing. Right now, as you can see here, we're at the 100-day moving average. We're at the lowest levels we've seen for quite some time here. As you can see over here, it's been towards about 2-3 weeks right now, since about 2-3 weeks since we've been down this way. So every time we kind of get this level, we kind of have gone the opposite direction. Same thing with the yields here. Every time we got to this level, like the 138 level, which we're at about 1.38 right now, we've kind of come back down a little bit. So it kind of puts us in this sideways pattern in this range right here. Between the 1.26 range and then we got the 1.38 range, where we've been kind of going back and forth for almost a month. Well, not quite a month, but for several weeks here. And of course, the catalyst will be next week when we get the FOMC meeting here. So stay tuned. We'll wait until next week, but most of the even though we got a lot of economic data, we'll probably have some economic data next week. The big one that investors will be watching, and a lot of that data could be shrugged off, but due to the FOMC, they're putting most of their attention into the FOMC next week, which will be it starts Tuesday, and then they'll have the announcement on Wednesday. So again, stay tuned, and if you guys got questions, we're here to answer. So, and we'd love to earn your business. Uh, so please reach out. If you guys like these videos, please smash that like button. We greatly appreciate your support. And thanks for watching. We'll look forward to see you guys on Monday's video. Take care and have a great weekend. Bye-bye.